Hi, and thanks for watching the latest video in our Bright Spark series. Today we're looking at one of the most common errors that is made on a UK self-assessment tax return, and that is whether or not to include PAYE employment income on a tax return. A tax return is a summary of all of your sources of taxable income, which you can then separate into its individual source on the tax return. So a tax return will include your self-employed income, it might include rental income from a property, it might also include dividend income if that applies, and it would certainly also include PAYE employment income. This might affect you particularly if you are a construction industry worker. The job market for the construction industry is very fluid. There's a lot of switching between employed and self-employed roles, in which case you need to ensure that you include both the employed and self-employed income on the return. This might also affect you if you have a full-time employed role but might have a small business that you operate on the side, or an Etsy store, an eBay store, or something like that. Your tax return is, as I said, a summary of all of your income, which you can then separate into its various sources. Page 1 of the Tailor Your Tax Return section will allow you to separate all of your income over each various source. Just tick whichever check box that applies. The only noticeable thing that is missing here from the types of income is grants. There's no specific section, so to speak, for grants. Instead, if a grant has been received for self-employment or furlough or PAYE, that grant is then included on the self-employment section or on the PAYE section itself. There's no specific section to deal with grants. And that's pretty much it. In summary, all of your income, assuming obviously that is taxable, goes on a tax return. A few quick questions that also come up quite frequently is what is taxable and what isn't. There are a number of state benefits that are taxable, and there are also a number that are not. Universal credit being the big one that is not taxable. So you do not need to include universal credit on your tax return. Really, a source of income is anything that's actually derived by a business activity. Transferring money between yourself and a friend is not business activity. It's not a source of taxable income. If you buy something that you then sell on eBay once a year, for that is not necessary. That's not obviously, that's not business activity, and so is therefore probably not going to be considered taxable income. If, however, you open an eBay store and are listing items on a daily basis and selling them on a daily basis, this is obviously business activity and would therefore be considered taxable. So really, when determining whether or not you might have anything that might be considered taxable income, just really ask yourself where that came from, what was the nature of that transaction, and if HMRC might consider that to be business related, then that's probably something that you might want to consider including on your tax return, or at least seeking some professional advice before proceeding. As always, you'll find a link in the description of this video to our blog post with more information on this topic, and if you need anything, you're welcome to get in touch.